Your next guest says this could be the end of the global energy market as we know it. Let's bring in now Dan Yergin. He is vice chairman of S&P Global. You no doubt heard that previous conversation. Dan, welcome.
Right.
What do you mean the end of the global energy market as we know it?
For the last 30 years, since the collapse of the Soviet Union, we've had a global market in which oil has pretty much moved around based upon the economics. Exceptions were Iran and Venezuela. But now we have what I've called a partitioned oil market in which Russian oil can no longer go to its largest market, which is Europe. And the markets are being divided, and that oil now is flowing east. And so the U.S. actually was even importing, Brian, upwards of 500,000, 600,000, 700,000 barrels a day of Russian oil because it made our refineries more efficient. That's over. So it's a divided, more politically charged oil market today.
I guess the billion or trillion-dollar question is, Dan, will it ultimately hurt Russia, or will they just fall in line with a new order? China, India, a little Turkey, Bulgaria, other nations like that have a full market for their oil. The West does its own thing, and we see kind of a normalized energy market, but two of them separate
right
in the world.
Yeah, I mean, we'll see a reshuffling of barrels. Now, India will still take barrels from the Middle East, but a lot of those Middle East barrels will now flow to Europe. But I think the point here is that Russia is going to lose money because of this. And this oil price cap, at first, you sort of thought, can this work? But it seems it is going to keep oil flowing into the market and at the same time reduce Russian oil revenues. And we can all be sure that Vladimir Putin hates the idea that the Western countries, particularly the United States, are now setting the price, or at least a price cap for his oil.
Yeah, but can he get around it? Because and this is spectacularly complicated, so I know we're a TV show and it's tough to do it quickly. But the bottom line is that those selling oil just merely need to attest that they are not violating the price cap. Now, they can inspect documents and ships, but it feels like it would be something that would be easy to get around.
Well, I think not. I think you're quite right. It's a kind of simple session. If Sullivan Oil wants to buy Russian oil, it has to, and you go to an insurer in London, you have to send a document saying, I bought it for under $60. And that's all. You're not reporting to a regulator. However, if it turns out that some other, oil company actually says that they did it for under 60, but they paid $72, then they're going to be in pretty big trouble with whoever is their national authority. So I think actually, I think it's going to work. It's going to work for a while, and it's going to work in an oil market that's weak and is oversupplied.
Let me ask you one final question, Dan. Again, it's a bigger one, and we're obviously constrained by time, which is there will be a day when Vladimir Putin is gone. Maybe hopefully it's tomorrow. There will be a day when things change. What's the long-term implication of what's going on right now? If Vladimir Putin is taken out or steps down or is disappeared tomorrow, does Russia come back to the global oil order, or are they ruined for years?
I don't think they come back quickly. I mean, it's now not only the flow of oil, but it's the flow of technology and investment. And Europe has said that we don't want Russian energy. Now, it depends who his successor is and how the regime changes. But I think Europe is never going to be in the position of the high degree of dependence that it had and that it's paying a high price for right now.